Welcome back, dear traders. Our analysts are ready to share red-hot forecast of popular trading instruments. As expected, pessimism which infected global financial markets due to the COVID resurgence in China spread to Wall Street. The benchmark stock indexes closed with the heavy losses. Dow Jones slumped 500 points or 1.45%. The Nasdaq tumbled 1.58% on Monday. The S&P500 sank 1.54% to close at 3,963. The major indexes traded quietly and mixed in the New York pre-market. All of them remained under selling pressure. The S&P 500 is expected to trade within the intraday corridor between 3,890 and 4,040 points. The benchmark indexes tumbled on a Monday because protests in China and the hawkish comments from Fed policymakers exerted pressure on the stock market. Clashes across the country were sparked off by the anger over the government's zero-COVID policy. The protests might derail global supply chains. Experts even warned that the social unrest in China could boost inflation if the United States, because disruptions in the supply chains are the main culprit of a high inflation. In this context, Apple shares slumped by almost 3% due to protests at the iPhone biggest factory in China. The high-tech giant will have to deal with an acute shortage in the holiday season. Apple has already lost $96 billion in its market value because of such prospects. On Tuesday, futures on the US stock indexes tried to regain their footing, but to no avail. China, which discouraged global markets on Monday, brought some relief today. Beijing announced a massive vaccination campaign for elderly people. Thus, investors hope that Beijing will relax restrictions amid the social unrest. Such hopes encourage growth in the US stock indexes. Chinese companies publicly traded on the US exchanges such as Alibaba and JD.com jumped 5.3% and 7.7% because China expanded channels of shared funding for builders. At the same time, the authorities cracked down on protesters. Tesla stock rose 1.7% in the pre-market. The shares of Apple, Amazon and Meta grew 0.7% and 0.8%. Consumer spending on Cyber Monday stood at a record $11.6 billion as Americans rushed to buy at bargain prices. The battered stock indexes could find support today from oil prices, which reversed upwards on Tuesday. In the early New York trade, the stock market might come under pressure from hawkish comments by Fed policymakers. The economic calendar contains the conference board consumer confidence index for November, house prices for September, and the services index by the Federal Reserve Bank of Dallas for November. The US dollar index extended its slide on a Tuesday, having shed 0.2% intraday. The index dipped again to 106.20. The intraday corridor is seen between 105.70 and 106.80. The US dollar has lost some of its gains of Monday amid waning concerns over the pandemic in China. Fed policymakers again shock investors' confidence. John Williams stated that the recession is a not Basel scenario and the interest rates will hardly be lowered until 2024. James Bullard came up with more aggressive remarks on the Fed's crusade against inflation. He said there is a long path to go before the central bank softens its rhetoric. He predicts that the Fed might raise interest rates to 5 and 5.25%. Meanwhile, the market is betting on the Fed's rate hike by 50 basis points in December after 4 rate hikes by 75 basis points. Today, investors say hello to a series of economic data. Fed's Chairman Jerome Powell is due to speak on a Wednesday. Until then, the US dollar will hardly gain impetus. The Canadian dollar is gripped by mixed trading forces. The USD CAD pace is still trading higher, having grown 0.38% intraday. The currency pair is trading at about 1.3544, within the corridor between 1.3490 and 1.3620. Energy investors are speculating OPEC and its allies, including Russia, could discuss another cut in the output rates at the summit on December 4. Such rumors propped up oil prices. Traders neglected the pandemic in China and the Russian oil price cap. The benchmark oil grades have been able to win back some previous losses, having gained 1.7 and 2.3%. Investors found out that the Canadian economy expanded its economic output in the third quarter. The Canadian economy expanded 0.7% in the third quarter sequentially for 5 quarters straight, following a 0.8% increase in the second quarter. The growth in exports, civil construction and business investments was offset by lower investments in residential construction and household spending. Exports climbed 2.1% amid robust sales of crude oil, fish and agricultural produce. Imports declined 0.4% amid the nationwide decrease in energy prices. The crypto market is recovering today. Digital assets are overwhelmed by the overall optimism. Bitcoin has gained 1.43% intraday and climbed above $16,000. Altcoins are also gaining ground. The fragile optimism might be wrecked by the grim news on the crypto industry. US cryptocurrency lender BlockFi on a Tuesday will make its first appearance in the US bankruptcy court after filing for Chapter 11 protection. BlockFi is expected to explain to the judge why it went bankrupt and what solution could be found. The company asked for permission to continue paying wages to its employees, to keep bank accounts, and to take other measures necessary to maintain routine transactions during the bankruptcy case. New Jersey-based BlockFi is the first prey to the FTX crash, which happened earlier this month. In its lawsuit, BlockFi said that it owes more than 100,000 creditors. FTX is its second largest creditor, with a debt of $275 million under the loan issued earlier this year. Besides, the crypto exchange Bifront also declared its closure. Bitcoin is not ready to exit the wide trading range between $15,500 and $17,200. And we wish you again full trading with the InstaForex. Subscribe to the channel and see you online tomorrow.